Good morning, everybody. Welcome to the Morning Blast. It is Monday, the 20th of April, all day. You join myself, Ryan, and of course, Michael, for a very, very, very candid markets-related podcast. Nothing we say on the podcast is trading or investment advice. Nothing we say is endorsements or whatnot. We make it very clear if we have affiliations, etc. Yeah, here to put a smile on your face and a bit of value into your day. Michael, how are you? Good weekend?
Yes, indeed. Very good morning to you, Ryan. Good morning, everyone. Apart from having somehow put my neck out and the football yesterday, I am all right.
Yes, likewise, actually, likewise. Yeah, that's the basic.
You put your neck out as well?
Well, no, I haven't done the neck part, but I'm sure I will. But no, it's the football's taking the shine off it. And also we've got the which we'll come on to in a moment. We've got the Schrodinger's Strait going on. Is it open? Is it closed? Is it both? No one knows. But yeah.
Oh, and just to make
Go on.
things even better, there's also supposedly meant to be tube strikes this week,
Oh,
which
joy.
will cheer everyone up, I'm sure.
Well, they always seem to happen around holidays and sunny weather.
Yeah, funny that.
Sure, it's a coincidence. Yeah. Should we crack on?
Indeed, yes. Clive Lambert's not on strike, is he?
No, absolutely
He
not.
hasn't
No,
unionised yet.
he's raring to go. Clive's Lamberts from Futures Techs with the market updates and levels to watch. Let's get cracking. The S&P saw green again on Friday. So much for that rule of 9 that Clive was touting. According to him, we live in an extraordinary times. Yeah, quite. The high in the S&P was 7,186. We kicked lower this morning. Obviously, the news. To be fair, I'm surprised that we've held up so well with the news that kind of the ceasefires all shattered. But there you go. We did kick off lower this morning, printing 7,085 before recovering to 71.26 and 75 cents as Clive went to print. Nasdaq futures also made new all-time highs with a 10th green candle in a row on Friday. DAX put some distance on 24,150 with gains seen to 24,966, but were offered this morning. FTSE futures also saw some green on Friday and is eyeing levels like 10,730 and 10,920 on further gains, the latter being the all-time high. Bund futures got up to 126.26 on Friday, a familiar level for anyone who pays attention to what's said on here, and it's a Fibonacci level that's been in play for quite a while. Eurodollar shied away from Fibonacci resistance at 118.27 last week and posted a shooting star on Friday, as did cable, also at Fibonacci resistance at 136.00. Gold and silver responded to Friday's news of things going, shall we say, iffy, squiffy with gains.
Is that a technical term?
Yeah, squiffy. Gold getting up to 49.18, where we found some sellers just shy of 49.35. LME nickel ended its recent bull run and posted a bearish outside day on Friday. Aluminium saw a big shakeout to 34.35, but recovered a good chunk of this subsequently. In crude space, Brent crude was off to 86.09 on Friday's news, but recovered close to 92.42, above the 91.66 level we've been watching right now. Overnight trade saw an early 97.50 print with a weaker tone set since then. TTF got down to, so the European gas got down to 38.74 on Friday, where the ship steadied. It's probably a little bit of a pun there. I'm going to give him the credit for that one. In overnight trade, we saw a strong start, a 43 print, and then some selling back to 40.43 as Clive went to print. It traded 2,500 lots by 6 a.m., which is pretty decent as it goes. But obviously, Sunday night markets, everyone trying to get sort of set up ready for the week ahead with what news has come out over the weekend. EU carbon markets caught a bid on Friday up to 78.06 to put some distance on 74.74 level that we've been touting for a little while now. So the bulls are gaining a bit of traction over there. And finally, UK's carbon contract, the carbon market, have been bid of late and is back above the 50 quid mark after bottoming at 34 back in mid-March. So thank you very much, Clive Lamberts.
Very good. Thank you, Clive. Thank you, Ryan. Yeah, let's actually start with what we see in markets this morning, and then we can kind of get our teeth into some of the developments that we've had over the weekend. Because I think, quite clearly the news flow over the weekend has leaned net negative. That is pretty much undeniable. In terms of the market reaction this morning, and just to put a little bit of context around that, the S&P future is currently trading lower by around about 0.6%, having paired roughly half of the decline that we saw at the Globex Open last night. We see crude benchmarks trading around 5 or 6% higher apiece. The dollar very marginally firmer, treasuries very marginally softer, and gold down by around about 1%. Again, if you're listening to this on a recording, those are prices, not door numbers, so they will look different by the time you listen to this podcast. However, I think there's probably two reasons for the market being arguably relatively contained in terms of what we see this morning. And I think the first of those is that despite all of the negative and pessimistic news flow we've had over the weekend, there is, again, at 8:36 London time on Monday morning, this is correct, there is still another round of US-Iran talks which are scheduled to take place in Pakistan on Tuesday. So I think the market is looking at that. Well, we'll get on to that. I think the market is looking at that and saying, if the two sides are still booking talks in the diary, then there is some hope that there is a de-escalation.
Well, they're not, though, are they? Because the Iranians have already said they're not going.
But journalists in Pakistan say that they are going, despite their public comments.
Yeah. Yes.
So, this is a problem, right?
Yeah.
And also, I would just say we had exactly this situation in the run up to the first round of talks, where the Iranians spent a day and a half saying we're not going, and then suddenly appeared in Islamabad and went, no, we are. So, yeah, who do you believe? I don't know. There's a lot of conflicting reporting. The other thing, just before we get into the meat of what's happened over the weekend, is that actually, if you look back at Friday, equities just went up in a straight line and didn't look back, but markets elsewhere actually gave up quite a decent chunk of the moves before the close on Friday. So the dollar actually ended Friday pretty much unchanged. Crude benchmarks were $5 or $6 off the intraday lows. Treasuries were 3 or 4 basis points off the intraday yield lows as well. So I think actually, the market's euphoria or excitement around peace deals and Hormuz reopening and all the rest of it, some extent of that had actually already started to dissipate by the time we all went home on Friday afternoon, meaning that actually some of the reaction you might have expected to see today was probably already, in the price. But anyway, we may as well get into the details of what's happened over the weekend.
Yeah, no, exactly that. Crack on. So it's day 52 in the Thunderdome, right?
I believe so, yes. And it is technically day 12 of the ceasefire, although, I'm not sure whether it's very much a ceasefire anymore, because both sides are claiming the other has broken it now.
Well, this is it, right? So officially the ceasefire expires on Wednesday, but, it seems by all purposes that, it's already been broken. It's, our tankers getting through, it's our ships getting through. No, not really. I think we've seen a couple of cruise ships run the gauntlet, but nothing of note elsewhere.
I was a bold choice for a holiday, but,
Well, I'm hoping they were empty.
I think they were. Can't imagine Saga selling trips around the Gulf of Oman. But
well, they've not got much time left for people going on those ones anyway.
Oh,
I don't know. Anyway,
to be fair, I probably shouldn't repeat this, but Michael Hewson did go on a Saga cruise recently, and he described it as God's waiting room.
Well, he's not that far off these days, so we've got to be careful.
No.
I hope he's not listening. Go on. So obviously, as we know, for those that meet, as far as I'm looking for all sources, comments, and whatnot about this peace talks that are coming up in Pakistan. But as we said, it's who do you believe? And the problem is, and we've said this a number of times, especially for the Iranians, there's 3 or 4 talking heads in Iran, and half the time they don't seem to know what the other one's talking about.
No, exactly that. Let's just go back to Friday very briefly, just to give everyone the full sort of update on exactly what's going on. So as we kind of alluded to, the market mood on Friday was very, very positive indeed. Firstly, we had comments via Axios, who noted that the US and Iran were discussing what they described as a memorandum of understanding to bring the war to an end. There was also some talk that this MOU could involve the United States unfreezing as much as $20 billion in Iranian funds, and that would be in exchange for the US getting control and possession of Iran's stockpiles of enriched uranium. And the White House described those talks as productive, according to the guys cited over at Axios. We then had various comments from President Trump, who was talking about how the deal with Iran, most of the points are, quote, already negotiated. He was also saying that Iran has removed or is removing all of its sea mines, and that the US will get all of what he called the nuclear dust that is lying around in Iran. And we even had some positive comments out of the Iranians as well, with the foreign minister, Aragchi, or whatever his name is, saying that the Strait saying that the Strait of Hormuz was declared, quote, completely open for the remaining period of the ceasefire in Lebanon. Important detail there, because, of course, Israel-Lebanon ceasefire lasts for slightly longer than the US-Iran ceasefire, which may or may not now be in place. So all very, very positive on Friday. And then Saturday morning, we woke up, Iranian media saying that Hormuz is back in its previous state. It's under the strict management of Iran's armed forces. That basically means it's shut, for those who are unaware. Iran have conducted various attacks on ships trying to transit the Strait of Hormuz over the weekend. I think there's been 3 or 4 of those attacks, although do go and double check with the UK MTO for a precise number in terms of an update on that front. There was also various accusations flying around from both sides that the ceasefire had been broken. Trump saying that with those attacks, Iran had committed a serious violation of the ceasefire, while the Iranians were saying that the US blockade of their ports is effectively a violation of the ceasefire. We've also had, continuing in terms of that blockade, a bit of an escalation on that front, with the US having, struck, I believe, with a massive, great naval gun and then boarded an Iranian cargo ship. This happened late last night. And I think, just generally speaking, as we alluded to, the news flow has leaned in a negative direction over the weekend, with with the situation appearing to deteriorate on the ground. Although, having said that, these talks are still scheduled. J.D. Vance, Steve Witkoff, Jared Kushner, they are, I believe, on their way over to Pakistan, and I would assume that the Iranians are going to get there relatively soon as well.
Well, quite. So regarding these talks that so you've got Schrodinger's Strait, Schrodinger's talks. So there's kind of 3 scenarios of how I've gamed it out. There's 3 scenarios. You've got scenario 1, which is, so this is on looking from like Iran's standpoint. So in regards to the talk, scenario 1 is tactical posturing, where Iran is saying no to talks publicly, and it's just public theatre to extract better terms. The delegation shows up within 48 hours under Pakistani or Chinese pressure. Ceasefire gets extended by Wednesday. Market path of least resistance is up, right? Or risk on, should we say. Scenario number 2, talks genuinely are dead. Ceasefire lapses on Wednesday, but there's no immediate kinetic resumption. The blockade tightens. Trump probably fires off some strongly worded tweets from the toilet. Oil finds a new floor slightly higher than where we are now. Equities give back some of the war end rally, but maybe trade flat for a couple of days and then grinds higher anyway if nothing's really happening. Scenario number 3, which is the escalation, which at the moment, no one's really pricing in, and that's obviously Trump decides the blockade isn't working fast enough. Strikes resume, oil's gap higher, all other risk assets sell off, and the tail risk that, to be honest, I don't think markets are pricing in, because if you look at equities, they're pricing in scenario 1. Oil seems to be pricing in scenario 1 as well. VIX pricing in scenario 1 as well. Yeah, I think if Iran comes to the table, again, remember that China are definitely pressuring Iran to come to the table, then this could all be correct. But I think we do have to think about these other 2 scenarios, that there's a difference between the ceasefire lapsing and no real strikes happening, but the blockade tightens, and a proper escalation. And it really honestly depends on how Trump's feeling on the day from the vibe you get.
Well, yeah, absolutely. I mean, I think the market is very much operating on the assumption that what we see is another example of this escalate to de-escalate strategy. And in many ways, you could actually argue that the Iranians have read a translation of After the Deal into Persian and started to adopt some of the strategies themselves, with what they've done in terms of reclosing the Strait of Hormuz over the weekend in advance of these talks. Again, we did see this last time, where actually in the day or 2 in advance of the talks, we had a lot of kind of posturing from the Iranian side. Will we go? Will we not go? And we had a lot of, threats and very punchy language from the US side, particularly in terms of the potential kinetic action and targets that they may look to hit, including power plants and bridges, which Trump was again threatening over the weekend. And of course, we also had that remark around wiping out an entire civilization or whatever it was.
Yeah.
So, there are some parallels that we can draw with the last round of negotiations. And I think, that is kind of the logical conclusion that markets are coming to. Having said that, it is very much going to be a case, as you rightly allude to, that the closer we get towards these negotiations happening, if there remain as many unknowns in, let's say, 12, 18 hours time as there are right now, then you would expect that the market is going to get a little bit more antsy and a little bit concerned about the potential that this doesn't de-escalate. And we do see, conflict start to flare up once more, which of course we hope doesn't happen. We want this to come to an end as soon as possible. I think everyone does. But, there is a kind of logical assumption that the longer we proceed within what's effectively a vacuum or a void in terms of information, the closer we get to these talks supposedly happening, the closer we get to this ceasefire potentially coming to an end, the more, if we still have this many questions at that point, then you would imagine that it's going to increasingly pressure risk appetites and is going to increasingly put upward pressure on crude benchmarks as well.
Yeah. No, exactly that. Again, so let's be honest, it's very much a wait and see at the moment. And anyone that's trying to game out too much is probably people are going to end up with egg on their face.
And that's absolutely, that is all we can do is very much kind of wait and see what happens. It's not a particularly comfortable position to be in when we're trying to give you some insight and analysis on what might happen next. But the truth of the matter is, no one knows. Even the people involved in these talks probably don't know precisely how this is going to unfold. And as you say, anyone who is claiming to do so, I would go as far as saying just completely ignore what they're saying, because they're unlikely to be correct. If they are correct, it's going to be through sheer fluke, and if they're not correct, then they're going to have a lot of humble pie to be eating.
Yeah, no, exactly that. Looking away from like Middle East for once to the week ahead, one big thing that I've just noticed, because I was just now this morning reading what's going on in the week ahead, is we've got older Fed Chair nominee Walsh testifying.
Yes, we do indeed. So that's tomorrow on Capitol Hill. I was actually going to leave that for tomorrow, so we can dig into that into a little bit more detail, and because I haven't made any notes on it.
But it is his first public speaking engagement since the nomination, right?
It is indeed. And actually, I think we mentioned this on the podcast previously. I was doing a bit of digging. I think it's the first time he's made any public remarks in about a year, because we haven't really heard from Kevin Walsh for a hell of a long period of time. He was then nominated by President Trump, of course, at the back end of January to succeed Jay Powell. But certainly since the nomination, he hasn't made any public remarks. The most recent remarks I can find were actually a university lecture that he gave shortly after Liberation Day last year. And of course, the entire economic outlook has shifted dramatically many times since those remarks. So I think it's going to be very, very interesting to see what Walsh has to say. And I think, again, we'll discuss this a little bit more tomorrow, but you've got to remember, of course, that the market is, albeit swaps aren't necessarily pricing this at the moment, but every market participant you speak to is very much working on the assumption that Kevin Walsh is going to be a much more dovish Fed policymaker than certainly the average on the FOMC at the moment, and certainly that he was when he was last there during the Great Financial Crisis. So, I think the bar is relatively high for Walsh to kind of live up to the expectations that participants have of him in some ways.
Yeah. No, exactly that. So, okay, let's skip that for now then. Let's come back to that tomorrow. What else is there going on this week?
Yes, there's actually quite a lot going on this week, which is just what we need when we're all watching geopolitical headlines relentlessly. But we may as well go through it anyway. I actually want to start with earnings season, because it's something that I think we've arguably neglected given everything that's been going on. But actually, last week, the earnings season obviously got underway. The banks largely reporting solid results. And actually, of those firms to have reported so far in the S&P 500, about 85% of them have surprised surprised to the upside compared to EPS expectations. Now, of course, there's an element of massaging the numbers lower and then beating lowered forecasts in there, as there always is. But that surprise is still above both the 5 and the 10-year averages, according to data that's been compiled by FactSet. So I think that is just something to bear in mind. In terms of notable reports that we've got coming up this week, just to pick out a few that might be of interest, 3M, they report before the market open tomorrow on Tuesday. They're just a useful bellwether stock. The easiest way to think about them is they make a hell of a lot of stuff in a hell of a lot of different sectors. And as a result, they can tell you quite a lot about both consumer and corporate demand within the economy. Also on Tuesday, but after close, we hear from United Airlines. Of course, they're going to be an interesting one to watch given the uncertain economic backdrop, given the massive increase that we've had in energy and in jet fuel prices, and also any comments that they have regarding consumer demand. And then into the second half of the week, focus is going to shift very much towards the tech names. I think that by far and away the standout report of the week is going to come after market close on Wednesday, and that's of course from Tesla. Tesla's Q1 delivery numbers were a little bit soft, so we'll see what that did in terms of the figures overall. But we also hear from a number of names that are kind of AI related or AI adjacent after the close on Wednesday and on Thursday, including the likes of IBM, Lam Research, Texas Instruments, and Intel. And I think given how the market is starting to get a little bit more excited around the AI theme once more, we've seen some notable upside in some of the tech names and Magnificent Seven names recently. Those earnings could actually be quite instructive ahead of the remainder of the hyperscalers who report next week. So obviously geopolitics is going to steal the kind of lion's share of the attention, but I don't think we should entirely neglect the earnings story that is continuing to bubble away.
Yeah, no, exactly that, mate. Exactly that. God, we got Tesla this week, right?
We do. That's on Wednesday. Yes. So we'll see if they run out of charge or stuff or et cetera, et cetera, et cetera. If we set the puns aside for a second, it's also a busy week of economic data, particularly here in the UK. Tomorrow, we get the latest jobs data. Wednesday, that's for February, I should add. Wednesday, we get the latest inflation figures. That is for March. Thursday, we get March public borrowing and April PMIs. And then on Friday, we get March retail sales. Of course, the CPI figures on Wednesday are going to be the main thing that market participants keep an eye on. Headline CPI seen at 3.3%, up from a prior 3%. No prizes at all for guessing that most of that is going to be driven by higher energy prices. Of course, all of that data is going to feed into how the Bank of England are looking at the policy outlook. Their next meeting is next Thursday. They are set to hold bank rates steady, but of course markets will focus heavily on the vote split and also on any policy guidance that the MPC might issue moving forwards. Outside of the UK, there's plenty else going on, including the March US retail sales data. That's due on Tuesday. As I alluded to, PMIs from pretty much everywhere. They are all out on Thursday. And then on Friday, we get a whole host of sentiment data from both the Eurozone and the United States. Again, potentially giving us a little bit of a read as to how markets or how the economy, is reacting, generally speaking, to the greater uncertainty and the recent move higher in energy prices. So very much going to be a week where geopolitics and Middle East developments are the main focus for market participants, chiefly these talks that are likely, potentially, maybe, possibly taking place between the US and Iran tomorrow. But there is a lot else going on. So if we do get some clarity on the geopolitical front, or even if we don't, there are plenty of other things that market participants are going to need to chew over the next few days.
No, exactly that. May we live in interesting times, etc.
Indeed.
And regarding, still, I was kind of hoping the markets would open a bit of a gap lower in equities, again, to buy the dip a little bit. I am surprised how resilient they've been today. I don't know what your vibe is on that.
Yeah, I mean, I think generally speaking, we are sort of following the trend that we have seen on every Monday since the conflict began, which is that we have a gap lower on Sunday night. Sellers get exhausted after 2 or 3 hours. Dip buyers then enter the fray once more. And then we actually see, and we have seen we've had 7 Mondays now. I think this is the 8th. Every Monday we've ended the day above the Sunday opening print. That just very much seems to be the vibe. I think market participants are kind of used to the idea now that we have a weekend full of bad news, and then the news, the tone becomes more positive on the Monday. Is there a degree of complacency creeping in? Potentially. If we were to get a headline that crosses at some point, and I stress this hasn't happened yet, it's a hypothetical, but if we were to get a headline that crossed at some point today along the lines of Iran aren't going to Islamabad, you're going to see a pretty significant adverse reaction because the market is absolutely not priced for that.
Yeah, exactly that. But again, your base case is that they do turn up, right?
Yeah, I think they will turn up. I think a lot of this is still probably posturing for a domestic audience primarily. And yeah, I would expect that they turn up and it's another round of quote unquote constructive discussions.
There you go. Well, there's hopefully, as being long risk I am, let's hope that you're correct.
I did wonder whether there was some book talking going on.
Oh, absolutely. As we all know, no one else talks your book, so you got to talk your own.
Well, quite.
Michael, thank you so much as always. Listeners, we hope we've added a bit of value to your day. And yeah, we'll see you all tomorrow, hopefully with some good news for risk.
Indeed. See you then.
See you later. Bye-bye.